there's sort of a spectrum of companies' life cycles, and it starts with sort of seed stage and venture, and it progresses to being a more mature business, having found product market fit, then progressing to what we call go-to-market fit, meaning you've got a product people want, and then you've got a way of selling it that actually resonates with the folks you're selling to, whether they're businesses or consumers. And then the business gradually matures from there to be more focused on profitability and expansion at a more measured pace. And so growth equity really sits somewhere in the middle. And there are a few different flavors of what growth equity can mean, actually. One is really taking venture capital to the next level. And so once you get past sort of Series B, there are firms who are doing Series C, Series D type of investing, which really just means sort of the third or fourth institutional investment into those businesses that are considered growth equity firms, but that has more of a venture capital flavor where those companies might be growing 100% plus, and the goal is to prepare those businesses for potentially an IPO and success as a standalone public company. There are other flavors of growth equity where a business might have been around on a bootstrap basis, meaning they've never raised outside capital and are founder-led, and they might be growing a little slower as a result because they are profitable from inception, since it's someone's kind of lifeblood in business. And those businesses tend to grow a little slower, they're a little more steady, but also a really popular investment area for many firms. And then there's a final category, which is sort of where TCV plays, which is crossover investing, where across different types of growth businesses, whether they're venture backed or not, what we really specialize in, and the C in TCV stands for, is taking businesses that are at some point of maturity of having found product market fit and go-to-market fit, and helping them figure out their next 2 to 3 growth vectors, and do that with a crossover from private into public markets. So helping the businesses get ready to be public, helping them actually IPO, and in our case, actually continuing to be an investor for many years after the IPO.